Hi everyone, in this video we'll be starting with the chapter number 8, and that is price trends and volume. Before watching this, make sure to check the other chapters of CMT level 2. The link is in the description box below. And I'm aware that I did not complete the previous chapter, which was momentum and oscillators. I will be completing the chapter in further videos. So in this chapter, we'll basically describe what are the four phases of price and volume trends. Like we know that price is not the only thing which is important. We need to also combine it with volume in order to get good trading signals. And we are going to see how to interpret volume in the context of the price trends. And we're also going to see how to interpret price and volume to identify the current phase. There are four phases which we'll be discussing in this chapter, and right now you might not be aware of the four phases, but after you complete this chapter you will be clear with all the four phases and you will be able to interpret and identify which phase is the price in currently. So technical analysts interpret markets through price and volume data. Price trends represent the dissemination and assimilation of the market. That also means that accumulation and distribution which is going on in the market. And then we'll see information by investors over time. Volume analysis is identifying where the money is flowing, the volume of the money, or where is there accumulation, where is distribution going on, and which point of price contains the maximum flow of money, which is also called as money flow. Market prices change as a result of money flowing in and out of investments as investors seek to optimize their returns. Price volume trend analysis tracks accumulation through demand and distribution via supply. Whenever we are referring to the term distribution, you can also keep in mind that it also means, just a second, let me change the color. Yeah. So whenever we are talking about accumulation, we are also talking about assimilation, and distribution, then we are also talking about dissemination. Price trend and volume analysis. After a primary trend has been established and its direction is confirmed, the next important assessment is the strength of the trend. So talking about what Charles Dow said, the observed trend should be assumed to continue until the weight of evidence has shifted in the favor of a reversal. So, like we have always discussed, the trend is your friend and you need to always follow the trend. If you can see that a market is currently in an uptrend and you can see that only higher highs and higher lows are being created, if you think and if you just anticipate a reversal and go in the opposite direction, and that is going to lead in your capital loss because you're not sticking with the trend. So, even Charles Doe has told us that you need to keep following the direction of the trend until and unless there is a significant weight of evidence which says that the trend is going to reverse. So until you have those clear signs, it's always the wisest to stay with what the trend is showing. Okay. Trends are being in a constant state of motion. However, it can be altered and broken. A price trend can be akin to an airplane in mid-flight. If a plane is to maintain its flight, it must maintain minimum airspeed. Should the pilot desire to increase the plane's angle of ascent, she must change the trajectory and increase thrust. If the pilot fails to apply the thrust, then the plane is likely to stall. Very simple. And similarly, just relate this particular example with how a trend moves. If a trend increases its trajectory, it needs to at least equivalent increase in volume. If a significant uptrend is just going on, but the volume is not increasing and the volume is declining, then that shows that the particular trend will either go sideways or it will come down again. Uptrends are markets in state of accumulation. Downtrends reflect a phase of distribution. Low volume wants an impending change in the trend. A low volume break of a trend discounts the validity of the counter trend movement or breakout. So you always need the volume to support the direction in which you're taking a trade. You need to always look at the volume bars or any other volume indicators, which we'll be studying in the further chapter, and take a decision. Whenever you see high volume, that basically talks about how legitimate a particular trend is. Rising volume signifies that more investors are eager to participate in the trend. Steady or consistent volume affirms the status quo. Declining volume warns of the weakness in a trend. So it is all about psychology, right? Everything in this market is about psychology. You need to always confirm your trades with the volume. And why am I even saying that you need a high volume when there is a strong uptrend? It's not just a random thing which we are studying in technical analysis. It is all backed by psychology. If you try to understand the meaning of it, what does high volume mean? High volume means that more and more people are buying there. What does that mean? That means the demand over there is really high, and that also means that the investors are interested to drive the prices high. This is the psychology behind high volume. Now, if you combine it with price, you can see that the uptrend is what the volume is signifying. The volume is showing that the uptrend is going to continue. So it's not just a random theory which we are studying in a book. It's all backed by psychology. Think about it, and whenever you're not able to understand a particular concept, try to think about it and put yourself in the shoes of the investors and try to understand why the price is doing what it is doing and why the volume is supporting it. And if the volume is supporting it, it doesn't mean that just because the volume is supporting it that the price will go up. It means it has a whole story behind it. You need to understand how to read the story of the price. Okay. The four phases of volume analysis. Every transaction is the result of meeting of demand on the one hand with supply on the other hand. Everything in this market is just about supply and demand. Whenever demand is more than supply, you know that if there is excess of demand and the supply is less, but the demand is high, then the prices increase. When the sellers are more and the demand is less, then what happens? More people are selling, there's more selling pressure, so the prices fall. Simple. So when you're talking about demand, you need to correlate it with the term buyers, and when you're talking about supply, you need to correlate it with the term sellers. Volume which occurs during advances may be designated as demand volume. Volume which occurs during declines or during downtrends, that can be termed as supply volume. By evaluating the interactions of price and volume, technical analysts aim to discover pent up supply and demand within the trend. Over time, these forces create stresses that influence the movement of the trend. These stresses come in four stages: strong demand, strong supply, weak supply. So, these are the four phases which we are going to learn. If there is an MCQ which says what are the four phases of volume in a trend, very simple, you just need to know strong demand, strong supply, and weak supply. So let's talk about the phase one, which talks about the strong demand. When we talk about strong demand, we are saying that there is a buying pressure or the buyers are more strong as compared to the sellers. What does that mean? When the volume tends to increase during advances, it is a bullish indication. Advances is basically accumulation. Advances means the price is going in your direction if there is an uptrend going on and if there's a significant high volume. The first phase of an uptrend is characterized by rising prices with plenty of volume. The fuel to sustain the price is usually follows an exhaustion of the supply. The birth of the new bull market often begins with wild price swings, mostly to the upside. Let's look at the image which is given over here, and you can see that this is the price, right? The price is continuously going up. And when the price was in the accumulation phase, when the price was just oscillating in the same place, the volume was also mid. Suddenly, the moment the price started going up, the volume also started going up. So you can see that the there is strong hands distributing to the weak hands, and there's a stock. The stock continues the run. You can also see here that the volume leveling off while prices move higher. What is the scale? Yeah. As the market appreciates and matures, more and more investors accept the higher prices, which restores their optimistic belief surrounding the underlying company. This is a market awash in demand, as indicated by higher highs and higher lows prevailing the price trend. The higher volume provides the market with energy needed to continue higher. Volume usually is confirming the uptrend, and that basically signifies and shows us that the uptrend is going to continue. So that is the first phase, which is strong demand. Very simple. Let's come to the second phase, which is weak demand. Weak demand is when the buyers are becoming less strong now and the buyers do not have the control over the market. In that case, what happens is that the volume tends to decrease while the price is moving up. While the price is advancing, that the volume is decreasing. That means the demand is now going slower. That doesn't mean that the uptrend has stopped. The uptrend is still continuing, but the volume is not supporting the uptrend anymore. That means that the uptrend is most likely gonna reverse. Let's talk about it. If you were to look solely at the price action without examining the volume, the beginning of the second phase of an uptrend resembles that of a mature half of the first phase. So let's look at the mature half of the first phase. What can you see? Figure 8.2. Yeah, sorry. Yeah. Look at this. The price is going up, but the volume wasn't supporting it at all. Look at this. The price is going up, but there's no volume that is supporting it. So that is showing us that price is most likely going to reverse, right? In this early distribution phase, the trend is beginning to destabilize. In this weak demand phase, the price continues to advance. It also creates higher highs and higher lows, but there is a decrease in volume, and that indicates that the demand is fading and the demand is falling, and there is a loss of energy that is required to sustain the uptrend. In simple terms, there are few willing buyers as the stock appreciates. Simple. As the volume falls, it contradicts the uptrend in price. Such action denotes as complacent market. Holders have enjoyed the benefits and holders have started booking their profits. That's what it shows. Few of these investors desire to sell a security treating them so well. They are motivated to do so only on a high bets, right? Obviously. They want to now close off their positions, they want to book their profits. They'll obviously book their profits at a higher price, which is why they're still driving the price up only to do their profit booking. The divergence between the price and volume trend signifies that the trend is facing weak demand. Look at this. The price is still going up, but there is no volume. Then suddenly the price came down, but the volume is still going up. What does that mean? Think about it. Then there is volume going up. Right, wait 1 second. I'll just show it to you again. Okay. Look at it. The price is again going up, but then the volumes are actually decreasing. That means that this is weak and this is just profit booking, and now the price is most likely going to come down. The price is going to decrease soon because the volume has already given us early signs. So this is a case of weak demand. Moving on to the phase 3, which is strong supply. When volume tends to increase during price declines, it is a bearish indication. This is exactly the opposite of a strong demand. Volume is increasing in a downtrend, which means that the downtrend is strong. That means there is a strong supply in the market. When the primary trend breaks down below the support, the uptrend has now reversed. Now, when the uptrend has reversed and the volume is increasing in the downtrend, that is the starting of the phase 3, which is a strong supply. Downtrend is formed because of selling pressure. Another word for selling pressure is supply. When a downtrend starts, what does that mean? It just means that the selling pressure is more than the buying pressure. Simple. The first stage of a primary downtrend should begin on rising volume. This is indicated by sellers' willingness to accept even ever lowering prices for their stocks. The rise in volume reversals that the supply is strong and it's growing. As the volume expands, it confirms the increasing strength of the supply, implying that more bearish actions might happen sooner. That is phase 3. I hope you're clear with the first 3 phases. We saw what a strong demand is, we saw what a weak demand is, and now we saw what a strong supply is. Now let's go to the fourth and the last phase, which is a weak supply. Now, what happens after the 4 phases are done? Let's talk about that. After, you need to know that these 4 phases in the market keep continuing over and over again. This doesn't end. Now, after this, again, phase 1 will start, again, accumulation will start, and again, it will go up. So, these cycles keep going on, and the markets usually travel in these particular cycles. Now, let's talk about the last one, which is a weak supply. Again, what is a weak supply? That means that the sellers or the selling pressure is now reducing in the market, and the downtrend is now becoming weaker, and that can mean that the price again might start going up and the direction might change. That is what is known as weak supply. The last stages of downtrend are typified by diminishing volume and rapidly falling prices. Again, it's the same thing. The price is going down, but now the volume is not supporting the downtrend. Look at this. The price is going up first, the volume is increasing with the price, and price are going even up, but now the volumes are stable and it is not supporting, and now the downtrend has started and the volume is going up. Okay. This weak supply phase appears primarily in two forms: a panic sell off, lackluster decline. During the intermediate or and short term, it is common for this phase to be the shortest or lasting only days. So, if there is an overall bull run and then this phase happens, then it will stay for less time, and primarily the whatever the primary trend is, that is going to continue. So, in that case, this is going to be a retracement and it's going to stay for only few days. Okay. In terms of market indexes, if the weak supply phase persists, it might not even be recognizable without the volume indicators. These events might indicate that the sellers are becoming apathetic to the price decline, which suggests that a new bottoming phase is forming. Let's look at this March 2003 to true bottom. So the price is going down and the volume is also going down. The price is going down. Now the volume is also going down, which means that the price might more likely reverse. That is known as a weak supply. Okay. Now, when you have neutral prices after a decline, neutral prices means sideways markets, and then volume starts going up. That means that the price is going to go up again. Buyers have again stepped into the market. Okay. Let's just quickly see this table. There are four price volume phases of trends: strong demand, strong supply, weak supply. What does strong demand mean? Strong demand means that the prices are going to trend up, and when the prices are going up, the volume is increasing, uptrend is confirmed, implication is bullish. Weak demand, prices are going up, but the volume is not supporting, which means that the uptrend is contradicted and there is a divergence between price and volume, which means that a bearish phase has started. And then we have a strong supply where the price is going down and the volume is increasing, which means there is a confirmed downtrend and the implication is bearish. And then we have weak supply, which means that the price is going down and the volume is falling. The volume is not supporting the downtrend which is going on. And then we have an implication that is bullish. Simple chapter, guys. There's literally nothing else to discuss. We're done with this chapter. Make sure that you create some notes and keep this table handy with you. Thank you.